The cryptocurrency market is a vast and dynamic ocean. Beyond the well-known giants like Bitcoin and Ethereum, a diverse array of digital assets, often called altcoins, are vying for attention and utility. Among these, XRP, Solana, and Hedera stand out for their unique technologies, ambitious goals, and growing ecosystems. These aren't just digital novelties, they represent serious attempts to solve real-world problems, from streamlining international payments to building incredibly fast and scalable applications. Understanding these contenders is key to grasping the broader evolution of digital finance. Their individual journeys, market performance, and particularly the growing buzz around potential exchange-traded funds make them fascinating subjects for both seasoned investors and newcomers to the crypto space. They are pushing the boundaries of what blockchain and distributed ledger technology can achieve in 2025. XRP, developed by Ripple Labs, has long been a prominent name in the crypto world. Its primary aim is to revolutionize cross-border payments, making them faster, cheaper, and more reliable than traditional systems like SWIFT. Imagine sending money internationally in seconds, not days, with minimal fees. That's the core vision behind XRP. For years it has been a top 10 cryptocurrency by market capitalization, despite facing significant regulatory headwinds, particularly from the U.S. Securities and Exchange Commission. This ongoing legal battle has cast a shadow, yet XRP continues to be utilized by financial institutions for its payment protocol. Its resilience and established use case keep it firmly in the spotlight as a major player with transformative potential for global finance. Solana, often dubbed an Ethereum killer, burst onto the scene with a focus on speed and scalability. It boasts the ability to process tens of thousands of transactions per second, a feat that older blockchains struggle with. This high throughput makes Solana an attractive platform for decentralized applications, especially in areas like decentralized finance and non-fungible tokens. Think of it as a super-fast highway for crypto applications, allowing for complex operations without the traffic jams seen on other networks. Despite a significant setback linked to the FTX collapse, Solana has demonstrated a remarkable recovery, with its ecosystem of developers and users growing stronger, drawn by its performance and lower transaction costs. Its vibrant community is constantly pushing new innovations. Hedera, or HBAR, takes a different approach altogether. Instead of a traditional blockchain, it utilizes a unique distributed ledger technology called a hash graph. This technology promises high throughput, fair transaction ordering, and robust security, all while being more energy efficient than many proof-of-work blockchains. What truly sets Hedera apart is its governance model. It is overseen by a council of leading global organizations including giants like Google, IBM, Dell, and Deutsche Telekom. This enterprise-first approach aims to build trust and stability, making HBAR an appealing option for businesses looking to integrate distributed ledger technology into their operations. Its unique structure also gives it a potentially different standing with regulators, which is becoming increasingly important. The prospect of exchange-traded funds for these altcoins is generating considerable excitement. An ETF acts like a bridge, allowing traditional investors to gain exposure to cryptocurrencies through familiar brokerage accounts, without directly holding the assets. For XRP, predictions from analysts suggest that an XRP ETF could be on the horizon, possibly in 2025 or 2026. However, this is heavily contingent on the resolution of Ripple's ongoing lawsuit with the SEC. The SEC has already acknowledged an ETF application for XRP from Grayscale, filed via the NYSE, initiating a 240-day review period. The recent launch and impressive $19 million first-day trading volume of CME Group's XRP futures on May 20, 2025, surpassing even Solana's initial futures performance, signals growing institutional interest and a maturing market infrastructure for XRP. Solana is also a strong candidate for an ETF, with analysts eyeing a similar 2025 to 2026 timeframe, especially if a new, potentially more crypto-friendly SEC administration comes into play. The SEC currently considers Solana a security, which is a significant hurdle that needs to be cleared before any ETF trading can commence. There are several Solana ETF applications already filed, and the SEC faces a final deadline of October 10, 2025, for decisions on 4 of them. Approval would be a landmark event for Solana, likely unlocking substantial investment inflows and further legitimizing its position in the market. It would signify a major shift in how regulators view high-performance blockchains and their native tokens, potentially opening doors for others. Hedera presents an intriguing case in the ETF race. Some analysts, myself included, predict that an HBAR ETF could even arrive sooner than those for XRP or Solana. This optimism stems from HBAR's unique regulatory positioning. It has not been explicitly labeled a security in the same way some other tokens have, and it notably hasn't been named in any SEC crypto lawsuits. Canary has already applied to list an HBAR ETF, though a formal 19B4 filing is still awaited. The SEC might view HBAR more favorably due to its distinct hash graph technology and its enterprise-focused governance council, which includes globally recognized corporations. An HBAR ETF approval could set an important precedent for other innovative, newer cryptocurrencies that don't fit neatly into existing classifications. The broader context for these potential altcoin ETFs is increasingly positive. The successful launch of Bitcoin ETFs in January 2024, which have since accumulated over $123 billion in assets, and the subsequent approval of Ethereum ETFs have paved the way. There's a general anticipation that 2025 could see a significant expansion in crypto ETF offerings. This is partly fueled by expectations of leadership changes at the SEC, with figures like Paul Atkins, known for a lighter regulatory touch, potentially taking the helm. Such a shift could ease the path for a variety of crypto ETFs, including those for XRP, Solana, and HBAR, driving institutional adoption and further maturing the digital asset ecosystem, bringing much-needed stability and liquidity. XRP's market performance has been a roller coaster, heavily influenced by regulatory news and broader market sentiment. As of early 2025, its market capitalization stands at a formidable $155 billion. The token experienced a remarkable surge of 426% following former President Trump's re-election, an event perceived by many as positive for the crypto industry due to expectations of a more favorable regulatory environment. This rally was also fueled by renewed ETF application buzz and hopes for a swift resolution to the SEC lawsuit. Financially, XRP generated $1.15 million in network fees in 2024, nearly double the $583,000 from 2023, indicating growing network usage. Ripple Labs itself holds a significant amount of XRP, with 4.485 billion units valued at around $12.2 billion, and a further 38.9 billion units in escrow. Solana has also demonstrated impressive market strength. Its market cap currently hovers around $90.5 billion. The price of SOL has surged significantly, notably climbing 70.42% against Ether since the beginning of 2024. This performance underscores its strong recovery and growing dominance in the smart contract platform space. Several factors contribute to this. Its resurgence after the FTX collapse showed resilience. It earned a staggering $750 million in fees in 2024. Its platform is known for user-friendly onboarding, and its low transaction costs continue to attract developers and users. Furthermore, Solana has significantly benefited from the recent meme coin craze, with many popular tokens launching on its network due to its speed and efficiency. Hedera, while having a smaller market capitalization of $9.3 billion compared to XRP and Solana, has also seen dramatic price movements. It experienced a significant 400% surge following Trump's re-election, mirroring the optimism seen across other altcoins. The project's robust governance model, featuring 30 diverse global entities like Dell, Google, and IBM, adds a layer of credibility and enterprise appeal. In 2024, HBAR earned $5.5 million in revenue. Its price has been somewhat volatile recently, while it's up an impressive 313% over the past 6 months leading into early 2025. It has seen a downturn of nearly 25% in the current year, reflecting the broader market corrections and specific project developments. The collective performance of these tokens and the anticipation of their ETFs have a wider impact on the cryptocurrency market. Approval of these ETFs would likely attract significant institutional interest, leading to more stable pricing, enhanced liquidity, and a stronger market infrastructure for these specific assets. This, in turn, could bolster confidence in the altcoin market as a whole. The Trump bump and ETF application news have certainly fueled a surge in many tokens. However, there's a note of caution. Institutions might initially adopt a wait-and-see approach, potentially leaving retail investors exposed to volatility. Despite recent gains, many tokens are still considerably down from their all-time highs seen during the COVID-19 pandemic era, reminding us that this is still a nascent and evolving market. Looking forward, XRP remains a critical asset to watch, primarily due to the intertwined fate of its price and the resolution of the SEC lawsuit. A favorable outcome could unlock immense potential, not just for its price but also for its adoption in mainstream finance. The recent success of XRP futures trading on the CME signals that institutional players are ready and waiting. If an XRP ETF materializes, it would represent a massive validation and could significantly simplify investment for a broader audience, potentially making XRP a cornerstone for bridging traditional financial systems with the emerging digital economy. Its established infrastructure for cross-border payments gives it a unique utility-driven value proposition that few other cryptocurrencies can match at its scale. Solana's future trajectory is equally compelling, driven by its technological prowess and rapidly expanding ecosystem. The key challenge remains navigating the regulatory landscape, particularly its current classification as a security by the SEC. Overcoming this hurdle is paramount for ETF approval and continued growth. Solana's high transaction speeds and low costs make it an incredibly attractive platform for developers building next-generation decentralized applications, from complex DeFi protocols to immersive gaming experiences and vibrant NFT marketplaces. Should regulatory clarity arrive combined with potential ETF listings, Solana could see an explosion in value and adoption, solidifying its status as a leading smart contract platform for years to come. Its resilience and innovation continue to impress. Hedera offers a distinct pathway and consequently a different set of reasons to keep it on your radar. Its unique hashgraph technology and enterprise-grade governance model, featuring globally recognized corporations, differentiate it significantly from traditional blockchains. This unique structure might offer a smoother path to ETF approval, potentially setting a precedent for other tokens that don't fit the standard mold. HBAR's focus on real-world enterprise use cases, from supply chain management to secure data handling, positions it for long-term sustainable growth. An HBAR ETF could attract a different type of investor, one perhaps more focused on the underlying technology's utility in the corporate world, rather than speculative trading, further diversifying the crypto investment landscape. In conclusion, XRP, Solana, and HBAR each present a unique investment thesis and technological promise. The potential approval of ETFs for these assets represents more than just new financial products. It signifies the ongoing maturation of the cryptocurrency market and its increasing integration into mainstream finance. As of May 2025, the regulatory environment appears to be shifting, potentially becoming more accommodative, which could accelerate this trend. These developments, combined with ongoing technological innovation and fluctuating market dynamics, make these three digital assets compelling entities to monitor. They are not just speculative tokens, they are foundational pieces of what could become the future of finance and decentralized applications, offering diverse opportunities and challenges for the discerning investor. Thank you for listening. Don't forget to subscribe for more updates.